Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 17th of January, 2019. We're just after 2:35 p.m. Central Standard Time, and it's a day full of rumors. The stock market exploded about an hour and a half ago as it appears that the Treasury Secretary Mnuchin has floated a trial balloon about taking the tariffs off of China. Whoa, the market took off with that news. We also had rumor mill today. It came out that there's a lot of sudden buying going on in the grain market. Remember, the USDA is basically closed. We don't know if that's real or not. We have to go to our own commercial sources to find out. There's rumors. I can't verify that anything's going on, but boy, you jumped rather dramatically here. Energy's jumped as well, and they're stable on the day right now because they'd be looking at it. That would take a lot of pressure if you thought about it. If the tariff war with China came to an abrupt end, what would take place? Remember, this flies in the face of what just happened yesterday, and that's why I think it's a trial balloon. The Justice Department's about to indict Huawei, the large tech company out of China, on stealing property. Which side of the street do you want to go on? It's very interesting. Before I finish up, and we're going to go through all the charts, I have made a change in how our subscription works to see my morning subscriber video where I'm able to say buy here, sell there. And I know people that watch these videos love these. You owe it to yourself, and you'll see in a moment what I'm talking about. Okay. In the gold chart, here we are up $2.50. The market's been on a tear to the upside since it was down near 1176. You can see that it's trying to wait to do something. I favor that it's going to break out to the upside on this type of pattern. So if I'm correct, the market is looking for a reason to break out there. I think the trigger could be tomorrow if the market were to take out 1295.40. Now let me explain why as a chartist and not with any part of my brain on this. You've got a pattern of lower highs and lower lows. You've suddenly gotten very quiet. What else has happened? I'm going to come back here. The market has stayed within this trading range of this day all the way through. It's almost 2 weeks now, and you just see that when you're in the swing line. On the swing line pattern, that's all that I'm talking. If you take out 1295.40 and don't first take out 1286.50, you'll change the pattern to one of higher highs, higher lows. When we come back to this downtrend line, you would also put the market over that. So that could be one way the market does it. Where would the failure number come in? Don't take that out and first go through the 1286.50, and then you're back right into the support line. So I have reasons to be suspect of what's going on. I wanted the market to break more, to be honest, because you had lost the embedded reading, and often price and the 18-day average come together with that. Right now on the chart, you see the 18-day average. You've got the 100 way down here. The black lines are the Bollinger Band. So if the market can clear that high, the 1300 level becomes the next obvious resistance as decided by the Bollinger Band. And what the market is trying to do is work out of being overbought. It has not done it. At the end of the day, one of the slow stochastic numbers is likely to be in under 70, but I wanted the other one under it. I'm not getting exactly what I wanted. When I come to GLD, this chart has the embedded reading. Remember I told you there's discrepancy going on here. It has the embedded reading. I would think in this chart, 122.44, if that is taken out, it puts into play the upper Bollinger Band. It already has the pattern of higher lows and higher highs. It is not a similar pattern to the futures that had that big outside day. It is not trading within that. The gold miners could negate the downtrend if the market clears yesterday's highs. If we take a look here and we go back to Wednesday, the high of Wednesday was 2078. So if you took that out, because today's low didn't take out the previous low, you could end up with higher lows, higher highs, but then the 18-day average becomes the resistance. Are we oversold? Yes, you are. The gold-silver ratio's at about a spot that I thought the market would get to, back to that 18-day average of closes, the difference between them. And remember, all this does is it tells you how many ounces of silver you need to buy an ounce of gold, but it does more than that, because it tells you if silver or gold are going the same direction, fighting with each other, what's going on. I got exactly what I wanted out of silver. This is textbook as to what I teach. You had lost the embedded reading right here. That puts into play price likely to get together with the 18-day average of closes. You can see how the market was playing around with that. I had traders who are going, well, Ira, I think not. Hit it today. So now I've got a neutral market. I cannot get a sudden buy signal on a chart out of this, but the market is no longer in overbought territory. So I can make arguments this market's going to try to base out here. We'll see what happens. In the copper market, obviously the news that we just got is friendly, and it sent the copper right on up. Now, let's take a look. Remember how I teach you, pay attention to Bollinger Bands and other parts. There's your upper Bollinger Band. If the market rallies, it puts into play that number. You tell me what occurred. In the platinum, trying to hold on here. Now remember, platinum has a lot more to do with diesel cars than it does with gasoline. It's the catalyst that you need in that converter, but the palladium is the one that's been the son of a gun. Up today, another $37. This is not about cars doing so well. It's about Russia, the U.S., and questionable supplies that are going to keep coming out of that as the U.S. and Russia get further and further apart. In the dollar index is fighting 3 days in a row now at the 18-day average of closes. That number is 95.72 basically, 95.71.90. You're 95.71.50. You're stuck right there as the market's trying to figure out what next. Remember what we've been talking about. One of the big trades that everybody's trying to focus on this year is what next with the U.S. dollar. Well, I talk about that and a lot more in my morning subscriber video. You don't see that on YouTube. It's not on other websites. You got to get it from us. And yes, it's delivered into your mobile phone if you want it. It's on our website. There's many ways to see it. But this is exactly how the charts will look. I have a black background on them. I teach what the different lines are that I'm working with. If you think you like these videos, I think you'll be hooked right away. And I cover 40 charts at each sitting. I start recording at 8:30 in the morning. And the reason that I choose 8:30 in the morning is that is when all the futures markets are open. We have people that want to trade cattle. They want all the options to be open on everything. So away we go. I cover all these different categories. Indices, the stock and the currencies, the interest rates, the meat markets, the grains, the softs, and the energies in that sequence. Some people can just scroll on the bottom of, let's assume you're not interested in stock indices, you want the currencies, you go right there. Then what I do is I talk about the chart action, what I think the active traders are, pros and so on, what they're doing in the market, where they're doing it. I will talk technical and fundamental, and I'll throw out specific, very specific ideas for you to start your day out with on your trades. So think of it this way. Imagine we were sitting next to each other and you have your own ideas to what you want to do, but boy, you'd like to know, does somebody else see what you see? This just might be something to help you. Now, how I priced it is simple. The first 30 days, $7.95. You divide that by 22 days, you can see it's very inexpensive. After that, $15 for each month that you want to stay. You can stop at any time. And it's a 30-day at a time deal. How do you get it? You can call my staff. They'll get you set up in 1 second. If you go to our website, because we have people all over the world that like to do it that way, either go under the word when you get to our website, products or education. You'll see morning subscriber video. You don't need a coupon. Just click it and away you go. I'm Ira Epstein. Have a great day, and I'll see you all tomorrow.